Hello and welcome to Business Today. I am Siddharth Zarabi and you are watching our special presentation, Easynomics. On Easynomics today, we talk about the rupee and it flirting with 80 to the US dollar. Now, 80 is a psychological figure, just as turning 40 is considered to be psychological. Imagine 40 becoming 80. But this is not about age. This is about India's currency and its exchange rate or its value vis-a-vis the US dollar. The US dollar, as we all know, still, despite all the profligacy, despite all the errors and excesses of capitalism, the US dollar still remains the world's most powerful currency and the global standard for currency exchange. It is the number one currency used for global trade. In fact, a vast majority of trade happens with the US dollar. Trade also happens in some other currencies, including the euro, obviously, the Chinese currency also, but the US dollar for now and in the past, since several epochal moments, and in the near future, is the currency of the world. It is the greenback that oils and makes the global economy tick. And as far as the Indian rupee is concerned, let's take a look at some of the numbers first. Before I sort of talk about the impact and why it is happening, let's step back for a moment. What's been happening to the rupee? Since January to now, as we talk about the rupee in kissing distance of 80, in fact, in what is called the aftermarket trade, it has already crossed 80. The official exchange rate, it's been a few paisa away as I was doing this chat for you. By the time you see it, it may have changed its value, but let's talk about the broader trajectory of the rupee. Since January this year, it's moved from above 74 to near about 80 rupees. And this is a pretty fast depreciation considering that in August, in fact, around the 15th of August 2018, the rupee was at 70 to the US dollar. So from 70 to 80 in a period of 4 years, including more than 2 years of the COVID pandemic. And the question in your mind might be, why has this happened? Well, to discuss the present and sometimes try and see into the future, you have to step into the past. And what is the past as far as the Indian currency is concerned? The past, and I'm going to take you a bit more into the past and take you back to 1993. 1993, a time when India was a completely different economy. A time when we had not heard of mobile phones, we perhaps hadn't heard of CNG, a time when real estate was not even considered investment opportunity, a time when education and employment opportunities weren't as many as now, when a government job was the gold standard for employment. That was an India of a different time. But in 1993, one of the most crucial decisions in our national history, and I'd say not just our economic history, our national history was taken, which was to move away from a fixed exchange rate to a market determined exchange rate. And that made a huge difference to the way the rupee moved and its value. We became in tune with the rest of the world. There was, of course, a demand by certain global powers and entities that India should allow full capital account convertibility. The Indian rupee is partially convertible. That's not the subject of our little chat today. But we didn't do that. What we did was to allow market forces to determine the exchange with the Reserve Bank of India, which has two instruments, one a blunt instrument and the other a more sophisticated arsenal of options to control the exchange rate, because among the three key uh, you know uh, responsibilities of the Reserve Bank of India, maintaining a stable exchange rate along with moderate prices and good economic growth, which is in fact the holy trinity of macroeconomic management. Currency management is one of the fundamental things that the Reserve Bank of India does and has done it very well. If you look at our near neighborhood and in a different context, see what's been happening in Sri Lanka. The country has imploded because of the characteristics of its economy and various blunders in the recent past by the government of the day, which is now, for all practical purposes, abdicated and fled. Nepal, again, economy that is under some amount of pressure, and the Chinese hand, by the way, being a common factor in Nepal and in Sri Lanka. And then you have Pakistan, which you could call a client state of China for all practical purposes. Again, let me point out, I don't want to talk about China and how wherever there is a Chinese footprint, that economy has suffered very badly. But I want you to step back, even as you sort of look at the headlines of the rupee being at 80, in alarm or in concern, depending on your position. If you're an exporter, you are happy. If you're an importer, you are unhappy when the exchange rate moves significantly. But within this sort of situation, India is an oasis of macroeconomic stability and has clearly come out of the COVID-induced slowdown and recession that caused great disruption to our economy. But why is the rupee continuing to slide? The reasons are primarily global, and the biggest reason is the reversal of the interest rate cycle in the United States. Why is the US Federal Reserve, the central bank of the United States of America, raising interest rates? The simple answer is that post the COVID pandemic, and in fact, right back up till 2008, the US economy has had trillions of dollars pumped in to keep it afloat, and that flood of money uh, reached all parts of the globe. This global tsunami of cheap money originating from the US and other advanced economies also ensured that prices went up in India, asset values went up, stock markets went up, but it had an impact on the US economy as well after COVID, with inflation above 40-year levels, 41-year levels. And that inflation has meant the reversal of the interest rate cycle. So foreign investors are taking money back out. The second is, relative to other currencies, people see the US greenback as a safer option because they see that various other economies are likely to suffer, and they will see impact on growth and consequently exchange rate values. So let's go and buy the US dollar as a safe haven, and that makes the US dollar expensive for Indian buyers also, including our oil companies, gold importers, electronics importers. Like I said, the exporters stand to gain. Since the mid of 2018, August 2018 to now, the currency has moved from 70 to 80, a depreciation of 14.24% to be exact. And given that the global factors, including the Russia-Ukraine war, economic impact, energy prices going up, global inflation, it seems that this situation is likely to prevail. In fact, there are experts, including brokerage house Nomura, which has said that the rupee could depreciate further to even 82 over 2-3 months, which is effectively September. We'll have to wait for that to happen because I'm not taking a call on what is the appropriate level for the rupee. The RBI doesn't, and obviously we cannot in any manner do that. But it's clear that the RBI has been using both instruments in its arsenal to defend the rupee. One is direct intervention by selling dollars aggressively. Billions of dollars have been sold in the recent weeks and months. And the second is other measures, indirect measures, and we have seen 6 major steps, including allowing Indian companies to borrow more dollars overseas, deploy them in India, allowing banks to offer a differential rate of interest on foreign currency deposits so that people are encouraged to hold foreign currency deposits in India. That eases the dollar crunch, so to say. And most recently, the first major step towards allowing trade, that is business, to settle transactions in rupee through an innovative mechanism that arose out of the consequence of the ban on Russian oil purchases and the sort of innovative mechanism that was renewed by India for direct trade settlement between India and Russia, because the US dollar, the greenback, as we know, is the backbone of international trade. China has been trying to push the yuan. The rupee hasn't been there, but that's also an important step. It is going to take time to show results. Until then, I think, while the headlines talk about the rupee in around near or crossing 80, the broader point is that a currency's exchange rate movement and depreciation or appreciation should not necessarily be linked to economic pride. It's a matter of economics, it's a matter of multiple factors, many of them not in the control of the government, but rest assured that as far as the Indian economy is concerned, relatively sharp exchange rates, while they could have short-term impact on prices, on inflation, on the cost of borrowing, it is unlikely that the depreciation of the rupee is signifying any weakness, fundamental weakness in the economy. And that is the message that I want to leave you with as I wrap up this episode of Easynomics. Do write into us if you have any questions, and I'll be happy to try and answer them when I see you again. Until then, goodbye and enjoy yourself. Take care of your health. Bye-bye.
If you like the video, do like, comment, share and subscribe.